Good afternoon, or good evening, whatever you like. If you ate dinner, it's good evening. If you haven't had dinner, it's good afternoon. So what can I tell you? Welcome to our first executive speaker presentation for this semester. I'm Mark Rubin. I'm the guy who hands out candy once in a while in the lobby, and I'm also the dean of the Farmer School of Business as well. So I have two hats, I guess. It's my pleasure to introduce our speaker, Dave Bassi, Executive Director, EY, of their financial service organization. David received his BS in mathematics from the University of Massachusetts Amherst and has more than 20 years of experience in the global insurance industry. He currently serves as Executive Director in EY's financial services organization, where he is charged with ensuring that data and analytics translate into maximum business impact. Prior to joining EY, David worked with CNA Insurance, GE Insurance Solutions, the Swiss Re Group, Plymouth Rock Assurance, and AIG. If you don't know much about EY, some of you probably are very familiar with EY since they are probably our biggest employer for our grads. Last year alone, I believe, EY hired between full-time and interns leadership programs over 100, and they've been doing that for the last couple of years. And that's all types of majors. I believe they're up to about 12, 13 different majors that EY hires. So some place that any of you in here probably can consider looking at as your place of employment when you graduate. EY Financial Services Organization includes wealth and asset management, banking and capital markets, and insurance. More than 35,000 EY industry professionals worldwide work in this area. They focus on regulatory challenges, growing assets, mitigating risk, and enhancing performance using advanced analytical tools to provide better solutions to client questions. In addition, I believe we have, at EY, we have about as many partners that are Miami alums as about any school in the United States as well, too. So a couple things to think about, again, when you're looking for your career. So please join me in welcoming David to our speaker series.
Thank you. Thank you all for coming to talk about that better? Fantastic. Thank you. He warned me to turn on the mic 3 seconds before I got up here, and then I didn't. I'm going to start out, the context that I talk about, I work mostly with insurance companies, and I help them take advantage of opportunities in a changing world. In this day and age, it's a lot about technology, digital technologies. Those might include blockchain or advanced analytics, machine learning, edge computing, all those things that you're hearing about in the news. And as companies try to navigate, how do I take advantage of these and not just use them as toys, because that's what people do sometimes when new technologies come out, but actually create business value for their customers, stakeholders, and shareholders. That's where I come in. And I help them from the strategy all the way through to execution of blockchain solutions in different contexts. I'm going to start with a little video here that I think provides a good insight into some of the work we've done and some of the value we see in blockchain. And then I'm going to go back into kind of a more formal presentation, which I hope is a discussion. I've been here since 11:30 this morning. I've been doing a lot of talking. I'd like to do as much listening as I do talking, so we'll try to make this an interactive discussion. Don't need to wait till the end, but we will leave time at the end. So I'm going to start with this little video, I hope.
Imagine a different kind of insurance industry, where everyone in the value chain has the same information, can trust its accuracy, and share it easily, with world-class encryption providing security, and an
You know how I get what's on my screen? Yeah, very good. Thank you. What am I doing wrong?
Yeah, you must have been in your PowerPoint.
Could have been. So we'll close out of this. This doesn't look like it. Maybe. There, that one's got to go. Okay, now let's try this again. tap it. Not with the actual video. Sorry about that.
Imagine a different kind of insurance industry, where everyone in the value chain has the same information, can trust its accuracy, and share it easily, with world-class encryption providing security, and an audit trail to underpin governance. Today, it feels a long way off. Look at the world of marine insurance. One of the earliest forms of protection, the sector's become a $30 billion global ecosystem. But with so many parties interacting constantly, duplication, inefficiency, and a lack of data are acute challenges. And with multiple jurisdictions and multiple regulators, change is hard. But change has to come because rates are under pressure. Costs are becoming unmanageable. Compliance is challenging. Errors and fraud are common. And growth is harder to find. Marine is changing. We're seeing new business models, new operating models, new alliances and mergers. But what if claims could be paid in hours instead of years? If premiums could be agreed and settled in seconds? If insurers could see the values of their risks in real time? If brokers could become risk innovators, leaving administration behind? The challenges and opportunities we see in marine insurance manifest themselves in different ways across the global specialty insurance market. In each ecosystem, everyone wants to find a better way of doing business. But there's a fundamental barrier in the way of change, and it's one we can only overcome by working together. To become more efficient, to allocate capital better, to innovate faster, and with greater confidence, everyone in specialty insurance needs easy, secure access to timely and accurate data. This is what blockchain delivers. A secure, distributed database that connects everyone in the value chain. Blockchain standardizes data on one platform and provides transparency for everyone in ways that open the door to greater efficiency, better compliance, and a secure audit trail. EY proved the concept. We are now building a platform that connects client exposure data to brokers and insurers. It will automate pre- and post-placement activities, including contract creation and declarations through the use of smart contracts, and accelerate premium collection. We've got the market and industry experience, the capabilities, the independence, and the trust needed to take the platform to scale. We understand the business challenges, from data standards to user adoption, and we have the technical knowledge, from business process design, regulatory alignment, to smart contract development. Now we're working with the industry, so we can all work on a shared answer to our biggest problem and our greatest opportunity. Together, we're finding ways to use blockchain to transform insurance. Join us today.
Great, that's the part I didn't do. Thanks. I always like starting with that video for a couple of reasons. One of them is somebody told me at one point that people with UK accents sound smarter, and since we're at a university, it seemed good to start with something that sounded smarter, so that was good. But the second is, I think it makes it real. We describe what the real value proposition is for blockchain and why it's important in this industry context, which translates into many other industries as you think about supply chain, as you think about identity, as you think about a lot of those things. That ability to have accurate, timely, and consistent information for all parties who are part of a transaction, part of a voting block, part of whatever it is really important. So we're going to do a couple of things today. One is, how many people here feel like, have at least, well, you must have heard the term blockchain because you're here, so I want to ask that one. But how many of you really feel like you know what it is? Good. So we'll start out with, it's good that the Blockchain Club feels like they know what it is, I met today, so that's great. I'm going to start out with a little bit of an overview, not a technical overview. This isn't really intended to be a technical discussion around, how does hashing work, how does the authentication of information work, any of those things. It's really more about, we've got this transformative technology. what does it really do, and how are people using it, and why does it matter? Because that's the space I play in. I don't play in the space where it's all about finding new technology and finding cool things to do with it. I play in the space where we've got a problem and we're trying to find a solution. And I hope you saw that in the video. We didn't start out this discussion with the shipping company who's mentioned here, Maersk, around what can we do with blockchain. We started the discussion with what are your fundamental problems? And their fundamental problems were very expensive to accumulate and disseminate information. A lot of arguments about when they sent it, whether it was accurate, what it meant. Took years for them after reporting that something had happened to one of their ships to actually get paid for the claim because they had so much verification. And those were the problems that they were facing. So we're going to talk a little bit about how it meets those pieces and then talk about some other areas where that's equally important. I would say, feel free, anybody, as we go through this, if you've got questions, something doesn't make sense, you don't agree, to chime in, and we'll see where we go from there. So blockchain overview. I think a lot of people quote, some of the more technical definitions. Blockchain is an incorruptible digital ledger of economic transactions that begin to be programmed to record not just financial transactions, but virtually anything of value. Nice little technical definition, but my experience is that doesn't mean a lot to most people. So I like to break it down into a couple of core components. So what it starts with, it's a shared ledger. So think about, you've got information, and in a lot of times, when you go to your bank has information about how much money you have and all those things. But you're actually relying on them. They have the true copy of that. You don't actually have a true copy of all of those transactions. They get it before you do. They summarize and give it to you, and you're essentially testing them. With a shared ledger, now anybody who's part of the blockchain who has the appropriate permissions has the opportunity to have the same information at virtually the same time. Really important, particularly when you're dealing with financial transactions where time matters and accuracy of information matters. For all of you who've I don't know if people still do this as kids, but when I was a kid, we'd play something called the telephone game, where you start with a secret, you whisper to the next person, you whisper to the next person. By the time it gets around, the thing that you started to whispering doesn't sound a lot like what came around the horn. That's a cute little childish game, but what we also find that in business transactions, I'll start with information, I'll send it to an intermediary who may send it to another party, who will send it to another party, and by the time it gets to the end user, it may not look exactly the same as it looked originally. Despite all the work we do on authentication, on ensuring that information is consistent and it goes across, we still get arguments, and I've personally spent too many hours in litigation, discovery around, did you tell me something that was accurate, and when did you tell me? And proving that can be really difficult if it's emails, paper trails, faxes, all of those things. So all having the same thing is a good thing. It's an immutable database, which means not that the information can't change, but you've got that audit trail all the time. So you've got the ability to look in and say, okay, when you think about cryptocurrencies, right? I know I had the cryptocurrency, I transferred it to Patrick. We know when that happened. He transferred it to someone else. We know when that happened. And that's all recorded. And with virtually no other areas, you can't change that. You can always see what that audit trail is. Where in most systems, you can go back. If my bank's got a copy of the information, my transactions, and they make a change to it, really hard for me to ever prove that they made the change. They may not even have an audit trail. It's also a way for transferring data. So it's great if we have one copy of the truth, but if we're all in different areas, say for example, we're doing a multinational financial close, and we've got information coming in from all the subsidiaries, and we're trying to do the aggregation and make sure it's in. Somebody makes a change to one of the subsequent files, needs to upload it. That data all needs to get transferred. In this instance, it gets transferred so everybody's got that same copy, same information, same time. And one of the overlooked pieces is security. It does this very securely. It does it in a way so you've got pieces encrypted, you can validate that the information's accurate. And so when you think about blockchain, if you're thinking about it in the context of solutions to problems, thinking about these four elements is a good way to start. Now, is it the only way to solve a lot of problems? No. I mean, for almost any business challenge you're going to face, there are going to be multiple ways of solving the issue or resolving the issue. The question always comes down to which one's best. I always like to tell this little analogy that, when you go to build a house, you've got a whole toolkit of tools, and depending on the job you're going to do to build the house, you'll try to figure out, do I need a screwdriver? Do I need a hammer? Could I get the hammer to hammer in a screw? Yes, I've actually done that. It isn't very effective, but it does work, right? It's not the best tool. In this case, when we think about our digital toolkit, we're thinking about what's our problem? Where's that information asymmetry coming in? And how do I bring this into a full toolkit that includes a lot of the analytics, a lot of the other customer bases, a lot of automation, and create solutions that are valuable to all parties in the ecosystem? That's something we'll come back to, because one of the things that's central for blockchain is that if all I'm doing is sharing information with one person and it can be in one place, not something I really need, and it's overkill in that situation. When I've got multiple parties and they all need the same information, and we'll go through this in the shipping example in a little bit, then having a solution where everybody has the same information becomes trickier. Does that make sense to people? Nodding heads, that's excellent. People are still awake. One of the ways that we've shared this and we've talked to executives about it is you can think about it as, instead of having a central clearinghouse for information that everybody accesses and uses when they need it, this is like all having the same copy of a spreadsheet with that information copied precisely in the same way, in the same thing that you all get at the same time, that's updated the same way. Pretty useful in certain contexts. And I'm going to walk through one of those in a little while, but a couple of elements around how does this work in practice. The first is you can think about it as both a database and a network, right? Because it's a database in that you've got all the information that you need that's recorded in the blockchain. Plus it's a network because that's the same information that's shared across what everybody else has got. Important concept. It's rapidly scalable. One of the things that is very valuable is you can add people to a proprietary system, you can add other nodes, you can add other places. In blockchain, spinning up a new node, which is what the connection to the chain is called, is actually a fairly simple process. You can do it in minutes in many cases, and be up and running and be connected into the system where you've now got that same history that everybody's ever had in that system, and you've got it immutably. It has secure records, so you've got one single source of the truth. That single source of the truth is really important, and in a lot of business contexts and business transactions, that's one of the things you find people arguing about. I don't know how many of you, I know there's at least one person here who's planning to be a lawyer. If you do a lawyer in a business context, you'll spend a lot of time arguing about what document went to who, where, when, and this helps you understand, really without much challenge, when was information exchanged and what happened. That synchronization piece comes in. The other thing that's important is you know everybody's got their own access management, their own digital identity, so you can tell who made any change that was made. Who claimed that they had a transaction that they were executing that didn't happen? Who claimed that who put information into a system that showed where ships were supposed to be and what values were on them? So that's all there. It creates transparency and visibility. And the other thing that I think I'd highlight that is really difficult in other places, because you've got an agreed source of the truth that everybody has access to, you then create something called smart contracts, which essentially say, if this certain conditions in this data set are met, so if in the insurance context, I know that there was a ship that sunk in Seoul Harbor, right? Then I have the opportunity to say, that's the triggering event. Once that happens, a payment is made. Today what would happen is I'd send a notice to my broker. Broker would send a notice to the carrier. Carrier would come back with 5 questions. They'd send a notice back to the broker, and that would repeat a couple of times. Finally, I'd execute a check. With a smart contract, you now got triggering event, all coded, fact, money transferred, virtually instantly. Really important in terms of, those of you who think about corporate finance. The ability to then say, okay, I've got this now. Instead of me having a receivable on my account for a period of time, and in some context taking a capital charge because it may be unsecured, you've now got something that says, okay, I've got the money. And that's good. That creates capital efficiency. So those are some of the key pieces around how this works in practice. That makes sense. Very good. So instead of imagining a world where you end up with something where every object in the world is connected. Because I think we're at a stage now where blockchain starts to create the infrastructure that allows you to do some things that are pretty visionary. And we'll talk about how that evolves over time. But imagine if every object in the world were connected. We could all see, we all knew what the financial transactions we were executing are, what our debts were, what our medical history was, where we're registered to vote, and all that stuff was available. And imagine that if you knew the status of every object, you knew where people were, you knew where cargo was, and you had the ability to look at kind of how does risk change and what does that mean for peace, then you start to develop this piece where you've now got the ability to create entirely new business models. Like I said, I focus on insurance, which is good because insurance essentially is a derivative of all other economic activity. You're protecting people against bad things that happen to property, things that happen in the course of business, financial transactions that happen. And so a lot of that ends up being pretty relevant. We'll go through an insurance blockchain example. So I want to go through the real example behind what we saw on the screen earlier. And the reason I want to do that is because I want to talk about how did that evolve and how did that become a blockchain solution. I want to talk about why it works. And when this video was made, it was still in the pilot phase, and it was very successful. The companies that were involved were very happy with it. I'm happy to say and proud to say that it's now deployed commercially. Companies in transactions that are worth hundreds of millions of dollars are now using this as their primary source of transferring information back and forth, executing premium payments, executing contracts. So it moves from the hypothetical, which sounds really cool, to the practical, which now sounds really believable. And I think that's an important transition we're going in with this technology. There are a lot of things out there in the blockchain world that you're not seeing yet that I know are in pilot phases with companies, major companies that are working on getting solutions that are tested that are really going to be transformative. And I think over the next couple of years, you'll see a lot more of that come out. So I'm going to describe a little bit how does marine insurance work and how does the marine shipping industry work. So you've got a company, in this case Maersk, that's all public information, who we worked with to develop this blockchain solution. And what they do is they ship things. They ship them all over the world. They ship them through ports. They ship them right from the source of manufacturing to end consumers. Sometimes they work with freight forwarders. Sometimes they work with other counterparties. Through is they had a whole army of people, 4 people. You'd see them, and they'd be looking at paper, typing things in, sending out invoices, responding to questions. And that was a full-time job for lots of folks. And it was very expensive for them. And it was there was not a single value add in that process for most of their customers, the people who actually paid to have things shipped. They also had a number of financial services organizations they were dealing with, which were insurance companies, financing companies, brokers, who all needed that information that army of people was collecting. They would send it to an army of people in all of their organizations, often via emails, sometimes via fax, occasionally still via snail mail. And they were saying, okay, this is crazy. Even once we get it into our systems, now we're needing to fax, send, email things to other counterparties, and we got to answer a ton of questions about it. We have all those questions about, is it accurate? When did you send it? We're still ending up with tremendous disputes. And even after doing all that work, we bought this insurance policy. It's supposed to pay us when a ship sinks, when there's a fire at sea, when something happens, and yet I don't see the money practically for a year, 18 months. Those are actually real numbers till after the event happened. And so I'm looking at this. I'm Maersk. I'm looking at this. I'm going, I employ a lot of people. I pay a lot of money for this coverage, and I don't get paid very quickly when I need to use it. Not a great situation. Their key partners in the insurance industry had a slightly different problem. They also had the army of people. Not great, right? Because all they're doing is taking in information that should be available, trying to reconcile it, and trying to decide whether claims should be paid. And those people were essentially just paper pushing in a lot of cases, not even value-added pieces to it other than the reconciliation. They also were in an industry where it was hard for them to distinguish between the risk of a particular shipping route. So they didn't really know where ships were, where they were going. And as you can imagine, if you're insuring ships, and one of them is going through a particularly dangerous area. Maybe there are pirates on there, because there's still pirates out there in the shipping lanes, versus one that's going into a particularly safe area. No hurricanes, no pirates around, nothing like that. You'd expect that you charge them differently, but insurance companies didn't know. They didn't know where the ships were going, where things were moving. And so that was a bit of a challenge. And because of that, they were charging, an uncertainty premium, making some assumptions around what needed to be. And they couldn't recognize when companies were improving risk, when risk was getting worse, because they simply didn't have the information available. Or they'd get it a year after, in some cases, the ships were moving and moving on. So Maersk was pretty forward thinking. They thought, we spent hundreds of millions of dollars on this project. We're not getting the value we think. And we think there's a solution here to create more of an ecosystem around so that we're not continually passing information around. We're not having arguments about accuracy. We're not having arguments about when people got things and what they did with them. And they brought together all of the components of their ecosystem. And that's an important piece, because before you start designing solutions, and a lot of times we'll see this, people say, well, I want to create a blockchain solution because it's good for my company. If it's good for your company and it's not good for the counterparties you deal with, it's really hard to create a solution that somebody's going to spend money to adopt. So in this case, you brought all the parties together, and everybody had problems with the administrative costs. Everybody had problems with information security. Nobody wanted to see disputes. So you had a pretty good alignment. Important piece as you think about blockchain, because it's not simply a solution that needs to, in limited cases, it'll work within one organization, you're okay. It's not a great solution for just a point-to-point transaction because you're only sharing between two people, but when there's a large group of folks, it is a great solution, but you need to get them all aligned on how it's going to create value for all of them. So an important part of the journey was bringing all of these folks together and helping them understand what was in it for them and creating a system that worked for them, creating the integrations that worked for them. And now you've got a situation, which you saw in the video, where when I go to place a shipping insurance program, the information is all readily available. People can give me a price instantly. They know what the risks are. When those risks change, they have the opportunity to create new products and adjust those prices, so that's good. When events happen, they've got the smart contracts and they can automate payment. You've now taken a tremendous amount of information asymmetry out, so now people have the same information at the same time. You've also eliminated a lot of administrative costs and burdens, which of course is nothing anybody wants to pay for. There's not a single person who is shipping a good on these ships that wanted to pay somebody to send paper to somebody else in the value chain, right? They all want to see the actual value delivered, and that's not central to their value. So this was all just overhead costs that was non-value added. And you can bring them together and get them to do that. And that's essentially what happened here. And then develop the blockchain solution around it. There was a lot of, after it was designed, there was a lot of the sort of coding and making sure it worked and all of those pieces. That was a good part of it. But the hardest part, and a lot of the time, was around creating something that created value for everybody. So that's one of the key concepts. And so now what happens? Everybody has access to this accurate and timely data. They have data now that they can rely on. When a good is shipped, that information is available electronically to all parties in the ecosystem, whether it's the finance company, probably ultimately the tax authorities. I mean, it wasn't part of this solution, but we've gotten it. You'll get a number of calls where people go, "Hey, it'd be great if we're taxing people if we actually knew where stuff was going in and out of our country." So there's a lot of add-on pieces to this, but you can confirm individual shipping orders virtually instantly. You can provide that information to the brokers who ultimately place your insurance products. You give the insurance companies the option to kind of understand risk and price it differentially, and also provide feedback on, hey, it would be cheaper if you sent this ship somewhere in a slightly different route or a slightly different time, so this can do. So you create a lot of value for different folks in the value chain. And that's essentially how the solution worked. Pretty good. And well, this is an example, and I wanted to do this purposefully, to give you sort of a concrete, living, real-time working example of how blockchain is adding value, because I think it's important to ground in not just the theory or not just the kind of four concepts, but also here's why it works in practice and why companies find it valuable. So that's sort of how this worked. Did that make sense to everybody? Okay, I'm getting a couple of nods and shakes. Right? I always have to do this to the guy in the back row who's shaking his head now. What parts of it didn't make sense?
It's just a lot to understand. I was gonna wonder, if there's a need for a broker.
So, great question. There isn't the need for the broker in terms of their role in exchanging information across parties, because that happens, and that is a lot of what they do today. There's still a role for them to help design the right programs, understand what the future risks are, give their view of protections, bring in the right parties, understand those things. And to be fair, there was a broker as part of the solution, as part of the infrastructure. So that was good. Thank you for being a good sport about that. So that was good. Any other questions before we kind of look onto some other applications I think are pretty interesting? Yep.
I see database, scalability, real time, I'm thinking the cloud.
Yep.
Is it really the audit feature and the security feature that differentiates the two?
So not real. I mean, I think all of the features differentiate because, well, you can cobble together other solutions that do these pieces. Bringing those four components together, I think, is the hallmark. The fact that it's all you've all got access to the same piece. Yes, you could do parts of that in the cloud, but even then, you're generally storing your information in the cloud, which could be coming in from other sources. Now those sources are linked. So across those. Great question. Anybody else? Good, I'll finish up and then we'll have more of a discussion. Thanks. Other blockchain use case. I want to talk about this one because I think this is really interesting and gets to sort of the tokenization of asset question. And one of the things that we've been working on developing and have a good interest in, and we're not the only ones. This isn't intended to be an EY commercial, although we do good stuff. So if you want to work for us, that's great because we get 100 of you every year. But when you think about it, one of the places. So anybody have a guess? What percentage of time is an automobile actually used? Somebody's got to be able to guess. In the back. Close. About 5% of the time. So what are the two reasons your car loses value? One of them is you drive it. There's a component of it that's based on mileage. The other one is just time. So that 95% of the time that you're not driving your car, it's losing value every day, right? And so you started to think about how can we create a solution that allows people to create essentially the Airbnb of cars, right? But then you've got some different challenges. Right? A house stays in one place, you know where it is. Cars move, if you're going to loan your car to somebody, probably want to know where it is when it's supposed to come back. Probably need some controls around it. You're probably a little worried about what if somebody crashes your car. So there are different components to it, but think about it as the Airbnb for cars, right? Blockchain solution then allows you to say, okay, I've now got we've got a number of cars out here, and we want to create an opportunity for people to share them. There are a couple of major insurance companies who are now building out these solutions because they want to encourage people the ability to share cars and take advantage of the 95% of the time it's losing value and you're not using it in a secure way. So we created this blockchain platform that allows you to do a couple things. One is everybody will know who's renting the car. When you look for a transaction to be able to use a car, it gives you the same thing you'd get at a kind of Airbnb, a rating of the person who's driving. You've got information about them. You can tell where the car is because you've got GPS signals coming in. And you've got this all in one central place that everybody can look at. The car owner can look at it, the person who wants to rent, potentially a fleet leaser. So we've got a lot of interest from car manufacturers themselves who are thinking, maybe I don't need to sell cars anymore. Maybe I just need to give people driving privileges on them, and instead of, I'll change my business model. Okay, we've got multiple parties in here, and we'd like to create a solution for them to share information so they can share the asset. Pretty good example. Now, why is this relevant to insurance? Because when we found our consumer research that a lot of the challenge people had with letting someone else use their car, renting it out to them, were a couple. One of them was the practical challenge. How do I create the network, know where cars are available, know what to bring back? How do I know it's going to be back on time? All of those things. But the other one was, I don't know if I want somebody to, somebody like Kirk back there to be able to use my car. Maybe I don't trust him, and maybe something's going to happen. So insurance companies kind of figured that out and said, oh, we're already providing protection for these people. We could enter an entirely new business that allows us to share vehicles based on a blockchain. And so that's one of the things that's being built out. A couple of places where it's not public. We've got a platform that we've been pretty public about, so I share that here. But that's sort of one of the examples where you start to think about blockchain not just in the Maersk example of helping automate a process, provide efficiency to a process that's already in existence, but this is a new business model where these companies that are developing this are saying, look, I today sell insurance, that provides financial protection. Financial protection is really important if people are going to start sharing their vehicles. Maybe I should get into an adjacent business model, not just do what I do today, and blockchain allows me to do that. I think that's what you're going to start seeing a lot more of, is not just do what I do better, but do entirely different things. Enter into new businesses that allow, that require that I have knowledge of, real-time knowledge of assets. I have real-time, I can share that with multiple parties as needed, and they all have the same information, so they have confidence. That, I think, is going to be a pretty important thing, and it supports things like fractional ownership. It supports urban fleet sharing. It supports lots of different things that you don't see today. And as we design these out, was an example where didn't see another solution that was going to allow people to create their own nodes on the network, share information, do it securely enough that it made sense, get the real-time, some subset of the real-time IoT data that's available from vehicles, and provide all the protection bundled in. Pretty cool example. And I think you'll see more of these in different aspects of the world. So that was one. And as it works, you end up creating a lot of value for different parties in the P. Vehicle lenders now have confidence. They have a network that they can be part of that allows them to capture the value in the 95% of the time it's not working. Vehicle borrowers now know where cars are. They have confidence that they can get in because it's got an auto unlocking feature that relies on the blockchain. And then the insurance carriers themselves have the ability to now create a new revenue stream. So insurance relevant example, you could flip this around and say car companies now have the ability to provide insurance, so it works both ways. I don't want to imply that there's only one way to go, but I think it's one of the areas where we see blockchain. Yeah. Does that make sense? I won't pick on you again, I promise. You can just nod. Anybody? Yep, good. And then we see a lot of other opportunities in the insurance sector. I'll go through these rather quickly, but I think what they do is start giving people kind of the idea of where is this going? How pervasive is this impacting? The other one of them is an automatic smart contract-based system. So today, if you get in an accident, you probably got to report to your insurance company. They're going to send an adjuster out. Lots of things are going to happen. You got to give facts about the accident. An automatic smart contract-based system allows you to, so your car, if you have an accident, you know what the car knows what the acceleration was at the time of accident. They know what you were doing. They know whether you were braking. They know the speed limit you were going. They know whether you're hitting the front or the back. They know if the airbag deployed. That information could become available through a blockchain-based solution, a triggering event, and allow people to just pay the contract. We've got companies working on that today. Really interesting one. Reinsurance settlements. For those not familiar with the insurance industry, typically what happens is you'll buy an insurance policy from your company. It might be Allstate, it could be whoever. And in many cases, they'll share some of that risk out with something called a reinsurer who basically provides insurance to insurance companies. And if a big event happens, maybe a hurricane, maybe a flood, maybe an earthquake, could be lots of different things, they'll collect from that reinsurance company and get back. Now, typically, in a significant event, that process for the insurance company to collect back can take years, 2, 3, 4, 5 years in some cases to finally collect the money. And the reason it takes so long is really quite simple. The information passing between the parties just takes a long time. When it's originally captured, it has to be collected, aggregated. It's generally sent out in spreadsheets. When you get the spreadsheets, you're generally going through them and you've got questions. So the ability to kind of automate those settlements does a couple things. One is, if you've got accounts receivable from an insurance company, you have a capital charge that's associated with that. So you have the ability now to eliminate that and create more of capital efficiency. Billing and claims, one area where we see lots of times you've got this, you'll have cases. Everybody who's got a health insurance policy probably has an experience where their insurance company has different information than their hospital than they do, and everybody's trying to reconcile who has to pay what, so those things end up being good. And I won't go through all of these because I do want to create more of a discussion here, but the thing I wanted to say most is there's a lot of places where people are starting to deploy this in all industry segments and in all parts of society. So not only from a business perspective, but one of the places we've started to see is the UN's working on undocumented people and creating blockchain identities for them so that people who have trouble don't have birth certificates, don't have passports, don't have any of those things, can now prove where they are. People are using it for voting to enable different voting contexts. So there are a lot of different things happening. And a couple of challenges. Somebody asked me this earlier, so I wanted to put it in here. The challenges we see in adoption are less technology and more, what's the business problem you're trying to solve? One of them is really being creative about what are the disruptive benefits. How do you fit? How does your business model change? What do you need to do? The strategies and roadmaps to obtain the benefits. The other one that's oftentimes, people think about blockchain solutions as being independent of the ecosystem that they're a part of. But a lot of the challenge ends up being integration with existing banking systems, existing financial systems, existing information systems, and then some is the scalability of technology, which is quickly going forward. So what do people think? Something that's going to take off? Do you know more about it now than when you walked in? Hopefully the answer is yes, because very few people raised their hands about what it was. I'd like to kind of get your thoughts. Yep.
So you find it a huge challenge to be when it is being integrated with like systems that are already in place, time being like one of the, so like, I'd say a company buys it and saying that they want a blockchain solution. How long is this going to take to implement, in the function?
So great question. In the example we had here, the development cycle for the solution itself was about 18 months. The integration of a new party into the solution was a couple of months. So not dramatically different than a big systems integration. It's actually shorter in some cases. And part of that was because there's still a learning process. It's still a relatively new technology. So I think that speed will become quicker. But yeah, that is one of the pieces that takes some consideration is how do you integrate with your existing systems, and people are solving that in different ways. Other thoughts? Yep.
That is a question. Like with the rate of innovation with this technology and with your current clients, do you see it? Is it difficult? Is it a difficult process to consistently update the technology with what they're using?
So we haven't seen that challenge, right? The blockchain solutions themselves, yes, they upgrade Ethereum, they upgrade Arthur Corda, they upgrade the underlying technologies, but that doesn't generally impact the intersection with the companies themselves because they're all connecting into this piece, right? It's much like if you create an internet app, the internet changes behind the scenes in a lot of ways pretty frequently. But you don't see that. The part that touches your company feels pretty static. Does that make sense?
Yeah, absolutely.
Any other thoughts? Oops, sorry.
Yeah. What do you think is like the first industry that's going to have the most impact on?
So I think it'll have impact. I mean, you've already seen some impact on financial services through cryptocurrencies, but I think you'll see more impact in financial services. I think you'll see big impact in all the logistics companies, particularly around supply chain. That's a big one to me because this is essentially, the Mayor's thing was essentially a supply chain challenge, right? You can use this for insurance, but you'll also use it for reconciling billings and shipping pieces and manifests and all of those pieces, which are pretty manual processes. So I think those will be big. I think any industry, this will take a little longer, but I think ultimately any industry where there's a lot of information exchange that's difficult to collect and painful to disseminate is going to be impacted pretty quickly as soon as you hit sort of a critical mass of applications. Yep.
So you mentioned that it's like so widely available and transparent. How is it at the same time so much more secure?
Yeah. So everybody's got the copy of, and can only see the things that they're permissioned to see in most of the solutions. So, well, you may not have a copy of everything, you may not have a copy of things you're permissioned to, that are relevant to you. So it depends on the design of the system, but that's where the security comes in. You have a key, it allows you to access and see certain things that you've got. You have certain access rights, like you do in many cases, but the underlying technology itself is pretty transparent. Now, there are certain public blockchains where everybody can see everything, but I see less application for those types of things. I think people are going to want more private pieces for a lot of solutions that we deal with. Does that make sense? What else on people's minds? Where do you see applications? I mean, a lot of you, as you think about this, is anybody coming up and going, wow, we should use this here? Yeah. Government bureaucracy, great one. I mean, some governments are actually really thinking about digitizing a lot of the interactions, regulatory filings, compliance. We've got a couple of, some non-US governments, but also some agencies within the US. It's a great one. Because I think it is one of those places, right? A lot of information is available, should be available through Freedom of Information Act requests anyway. They take years to comply with right now, and yet it's all in the systems. Love that one.
What about online education? We've had issues, for example, when a student has to take a test online,
yep.
How do I know it's that student
yep.
who's actually taking the test?
Yeah, so I think that's a great application of sovereign identity pieces. If being able to authenticate either biometrically or through the devices you have that you are you, I think is a pretty important piece and will be important in that context where you want to make sure that the right student's taking the right things online, but also important in, today when you walk in to vote, a lot of times all you're doing is giving people your name and address. Well, I mean, people could look that up. So that's not that secure, and so there's a lot of applications where being able to establish identity and all the characteristics associated with that identity are going to be big applications.
How about also related? Everybody today uses the social media to get feedback on you're going to buy a product, right? And you look up at Amazon and you see how many stars they have,
yep.
and all that, and you go, well, somebody manipulating that data, but they just say, oh, this is a great company, this is a great company.
Right.
Now you say, Amazon begins to say, oh, well, we can authenticate that that person purchased that product.
Right.
Some of the opinions.
Yeah. Amazon does a lot of that today anyway with other ways, but I think one of the other question is, what if Amazon itself, or a better example is Yelp, who actually do suppress reviews, didn't feel like they wanted to put forward your particular review? This does allow people to create, independent of any central authority, things like review systems, and we see some companies looking at that as a new innovative ways to say, look, I don't know that I want my opinion to be curated through somebody who has to say it's right or not right, so you could do it through, I've identified you, you now put it out there, nobody can change that, and you can see it regardless of what the company thinks.
Will that be affordable to do? I mean,
Yeah.
The cost of doing that will become
yeah.
inconsequential like it is
right.
on the internet.
Yep, exactly. And I think it's partially because you hear a lot about energy consumption for a lot of the blockchain solutions, and that's partially because the way they do something called proof of work versus proof of stake, and once they change some of that around, which they're starting to do, it becomes much more energy efficient.
So another immediate one to think about is, not too distant future, your resume to be authenticated.
Yep.
Completely by blockchain close to people, because you've heard about people who claim they did this or they went to that school, and you find, oh, well, they actually never did any of that.
Right.
Well, too.
Or you tell different things to different people.
GPAs, no?
Yeah. Mobile banking, yep. Another good one, and particularly in mobile banking solutions that may not rely on a centralized bank, where you can now have sort of records that it do. And we see some people working on that. Great one. Yep.
So what about so it seems like in these examples, it was more like parties on like a horizontal plane. So everyone having interest in one action that was happening. What about on more like a vertical plane in like manufacturing, where you have all of your suppliers and then you have a final product sensor's broken. Having a blockchain solution maybe where the sensor, you're getting that feedback, you're immediately going to the suppliers all the way through like the vertical process.
Yep. Yeah, I mean, I think it's just a different plane, right? When you think about it through the supply chain. I mean, this one was across, it's a sort of industry vertical. But I think those are solutions that are being developed as well. A good example is food provenance, right? Where, somebody grows something, it gets into a product, it eventually gets to a store. Well, what if something happens where there's contamination? How do you trace back? So that's one place people are doing, I think, is a sort of analogy to what you just described. You'll see more and more of that. That's a great example because people can then amalgamate all the information. It just doesn't run through one piece. And it's clearly possible. Did that answer?
Yeah, I see like a huge, when you talk about like delay in time,
Yep.
I know like the fact that delay, like, talking about like any boards, like Ford, say they have a fun sensor that breaks, they have to go all the way back.
That's right.
Supplier.
That's right.
Supply chain is so big.
That's why supply chain is so big, and that's why some of the big grocery stores have started on it, given the romaine lettuce scare a couple years ago, which caused them to pull all romaine lettuce nationally off of every grocery store. When now, you could, in the next one of these, I think you'll see it be much more targeted, where it's lettuce grown in this particular area that goes through these particular conduits. It's a great one. I think the other thing you're seeing is not just, so it'll be a lot like the development of the internet, right? A lot of companies developed their own proprietary intranets, saw benefit then in connecting them, and eventually ended up with a very connected ecosystem so that things work both horizontally and vertically, and I think you're seeing that in here as well.
So what jobs do you think
Oh,
disappear and which jobs might be created by what?
So jobs that will disappear, I think, are going to be a lot of the paper-pushing reconciliation jobs in a lot of different fields. And particularly, we're seeing some blockchain developments where the solution is creating its own audit node. So instead of compiling information, bringing in physical auditors, you can do that through the audit node. So that'll have some impact on some jobs that might be near and dear to people in this room's heart. Ones that will be created will be entirely new businesses around things like sharing information, places where you couldn't do car sharing today because you didn't know enough about who owned the assets and where they were, which I think will be entirely new businesses and create entirely new jobs. So it'll be a big give and take in that sense. And I think you'll also see entirely new industries because you'll have data sets that are now just not available today because nobody rationalized them and collected. That'll create abilities to create more information-based products. Back here, and then back here.
What are the biggest challenges you see facing blockchain as it starts to take off?
Yep.
What kind of things might be difficult?
So one of the challenges we see is it's got slightly different information security and risk management protocols that need to be developed that are sort of lagging a little bit. So we've seen some solutions developed where they go to do broad deployment, particularly working with big companies with information security protocols that are requiring adherence to generally accepted standards, which just aren't quite there yet. So some of that's going to have to develop, and that'll be, I think that'll be next generation people coming out who will be starting to develop some of those. And what was the second part of the question? Sorry.
Well, just like what kind of things do you think are going to be, big growth?
Yeah. So that's one. I think the other one is just simply time, right? It's going to be a bit of a network effect. A lot of these solutions get to be more valuable the more participants you get in. So I don't know if it inhibits growth, but once you get to that tipping point, it'll move much faster, in my opinion. There was a back there? Can you start that again? You're just a little hard to hear.
So even though there's all these like benefits to blockchain, do you find like its complexity to the core itself? If so, actually.
So great question. The question was, do we see the complexity being a barrier to adoption and inhibiting implementation? The answer to that is no. Because actually, a lot of the development of blockchain-based solutions are simpler to implement and more straightforward than their traditional counterparts or alternatives. So it comes with selecting the right problem. But what is a challenge is there aren't enough trained professionals who understand what can the technology do and are competent developers. So that is a bit of a challenge. I think that'll be self-correcting. But And I think we're making bigger strides toward getting people trained in the core technology than we are in people who understand how do you deploy a digital toolkit to our business problems. And that'll be the one that moves. Thanks.
Time for one last question. Anybody else? What up in the balcony?
Hey.
So I know there, South Korea and Mexico legalized using cryptocurrency, but
Yep.
how about like US? There's a lot of for insurance and cryptocurrency. I know there's a lot of like legal issues.
Yep.
How are they going to?
So there are a couple of places in the U.S., and it would tax my memory right now, where local governments are already taking cryptocurrencies for certain types of tax payments. And I think you'll see more of that. I think the challenge in the U.S. is going to be the banking system is fairly heavily regulated, particularly around anti-money laundering laws and some of the stuff around knowing your customer and who you can deal with. So the federal government will have to think about how they want to deal with that. But I think that's more transparency than it is the fundamental cryptocurrency. So I expect it'll evolve. But you're starting to see more governments take them. Why not, right? It's got a value. You can trade them. They're exchangeable asset. I agree.
We want to thank David for taking time out of his schedule.
Thank you. This is a great group. Really enjoyed it.
We'll be around for a few minutes to answer any quick questions. Have a good evening.
Is that good?